Ladies and gentlemen, is there a crypto crash incoming? I believe there may be an incoming crypto crash because of recent events. I want to share this with you. Many of us who have been following crypto for some time, whether as an investor or an enthusiast, many of us have been expecting some sort of regulations coming from the government soon. I think now we have an idea of how they're going to attempt to regulate crypto. This is going to be very interesting, and I think this could cause an economic crash in the crypto sector. I mean, on an enormous scale. I actually believe this could be some of the worst news that we've ever had in crypto potentially. And we're talking about a way to basically shut down the vast majority of the crypto markets. Now, this is a worst case scenario, but it's important to pay attention to what is happening. And I think anything that looks like significant restrictions on the crypto market in the US is going to create a massive downturn. And it's important to be prepared for this because I don't think we're going to get a lot of warning. In fact, this may be the warning right now, being able to see what's happening in this space. Now, I love cryptocurrency. I'm supremely bullish, but I've always from the beginning thought that regulations would have a negative impact. I am not under the belief that we have a bunch of saints in Congress and in government who are only looking out for the little guy. I believe the people in power get there because somebody funds their campaign, pays a lot of money for their campaign to be able to put them in power, are the ones ultimately who's going to get the more favorable laws. And ladies and gentlemen, you and I probably aren't the ones putting politicians in power, those of you watching this video right now. And if you are one of the people who are putting politicians in power, do me a favor, make certain you smash that like button, hit the subscribe button, click that bell notification icon, and just maybe somewhere along the way you'll get something from this channel that might enlighten you. All right, let's get into this. So I am a little bit concerned about what I'm seeing, probably more so concerned in a while, and I hope this is a lot to do about nothing. But recently, if you've been watching the news, we know that there was a recent executive order on crypto. It's getting prepared. The news headline came out saying that it's getting prepared. Now, this is interesting, and I thought the news headline was important for a couple of reasons. First of all, if you got to sometimes read between the lines. Very rarely do we get this much forward notice that there's going to be an executive order. And I almost think they're kind of watching how markets are going to react, and I think they're kind of virtue signaling what's ahead. But for some reason, we get several week notice that, hey, there's going to be a executive order on crypto as early as February. Now, the executive order itself isn't necessarily bad news. The executive order just basically says that the administration is going to, have these agencies start trying to define the framework and how they can potentially regulate crypto. Now, personally, I think regulations are bad. I don't think regulators are working for you or me, the little guy. So I think ultimately we get screwed. This already happens, by the way, in the financial markets. If you look at some of the most profitable areas in the market, you'll see a tremendous amount of regulations stopping small investors from participating. Instead, the small investor in the financial markets get access to the stock market. Mind you, one of the only places in the world where a company can sell its stock for 30x valuation. Like, most people don't realize that. I actually think a big part of even though I'm an investor in the stock market, I think a big part of it is quite scammy. I mean, you can't, as a private individual, if you sell a company, you can't sell a company for 30 times valuation, 50 times, 60 times valuation. There's nowhere on the planet that you can sell a company for that kind of valuation, except for the stock market to average Joes in the street who are trying to be investors. Okay, I digress. So as you can see, I'm not super confident about regulations when it comes around financial regulations and cryptocurrency. So I saw this headline. I thought this is worth paying attention to. What direction are they going to go in? But this kind of reminded me a little bit when I see an executive order. First of all, I'm not a fan of executive orders. I don't know how you feel about them, but I always think executive orders are a unilateral way to pass laws or attempt to pass laws or create regulations, which essentially are laws. The problem with executive orders, the problem with quote-unquote regulations, is they don't go through our normal checks and balances to be created the way that laws are actually written and created here in the U.S. It's not easy to get a law passed in the U.S., but it's quite easy to get executive orders passed, and it's quite easy to get regulations written, which both can act as laws in the U.S. So I'm not a fan of this. Now, what's interesting in the U.S. is there's always a lot of political manipulation, because if a Democrat president writes in executive orders, the Republicans claim that, oh, that's bad, executive orders are bad. If a Republican president writes an executive order, then, oh, the Democrats complain, oh, that's bad, that's an abuse of power, you shouldn't write executive orders. Yet both sides always does it, and there's no accountability, unfortunately. So with that being said, I see the executive order, I see that it's specifically targeting crypto, my spidey senses go up. And I kind of start thinking about the executive order that banned gold. Now, most people of crypto investing age right now, which is typically under 35, are not even familiar that gold has been banned in our country. Right here, Executive Order 6102. This executive order was signed in 1933, as you can see here, by Franklin D. Roosevelt. Now, here's what's interesting. In both this executive order and this executive order, if you read what they're saying, they're basically saying, hey, we think there's a lot of, terrorist activity, or there's a lot of national security risk in cryptocurrency. Guess what? This executive order, they basically said the exact same thing. This executive order was made under the authority of Trading with the Enemy Act of 1917 and amended by the Emergency Banking Act. There's always these very important reasons to be able to pass a law, and the law is always framed, especially the title of the law, it's always framed in a way to protect you, the John Q. public, and me, right? You and me. The problem is it's never really about us. I mean, that's the truth. And it's always designed to protect somebody else outside of you and me. I'm sitting here thinking, okay, what are they going to do? How can they ban cryptocurrency? You see, in this executive order in 1602, the 6102 executive order, 6102, say that slower. The 6102 executive order, this executive order, they didn't come and arrest people for having gold. The way they did this is they basically went after the banks in general and said, hey, you can't exchange gold for dollars anymore. Dollars are no longer backed by gold, essentially. So they went through the banking route. This also occurred back in the 2000s when they went after online poker sites. Now, what's interesting, when they went after online poker in the U.S., they didn't make it illegal for you or me as a citizen to play poker online. It's perfectly legal today in most states. There are some states that have specific laws, about 6 or 7 states have specific laws that make it illegal to play online poker. But in most states, it's actually not illegal. However, it is illegal for the banks to be able to allow for payment to an online poker site. So they don't have to go after you. That's impossible to stop you in your own home, the privacy of your own home. But they can stop the bank. So that's why, as a U.S. citizen, you can't easily buy into an online poker site. It's why a lot of poker sites now take cryptocurrency, for example. So I'm sitting here thinking, how are they? They're clearly going to come after the financial institutions or the banking institutions or the cryptocurrency exchanges. But if they're going to do that, what would it look like? And then, lo and behold, we see this. By the way, I want to give a quick shout out to Naomi Brockwell. I saw this on her channel, and I decided to make a video about it so that my audience could be aware as well. By the way, she has an incredible channel. I highly recommend that you subscribe. As you can see, I'm subscribed. I got the bell notification on. Her content is top notch when it comes to cryptocurrency and privacy-related issues. It's a great channel. I'll put the link in the description. Go check it out. But she recently did a live stream as of, I saw it today, and it said crypto's top lobbyists say you should worry about the Competes Act. Now, the Coin Center Blockchain Association are both concerned about how specific provisions of the American Competes Act could negatively affect the crypto industry. Now, here's what's funny. This act that is written has absolutely nothing to do with cryptocurrency, but this is how they sometimes shove through obscure regulations. Again, I hate to draw these parallels, but we've seen this before. When they made it illegal for banks basically to allow for transactions to online poker rooms, the way they did that was it was a import-export bill that had absolutely nothing to do with poker, gambling. It had nothing to do with gambling, whether you should or shouldn't gamble at all. Nothing at all. The bill it was literally talking about bringing in exports and imports into the country, bringing in imports and exports to the country. That's what it was all about. So they shoved it in literally in the last minute, this provision. It was amazing how quickly it got through. And at the same time, it was somewhat sad. They took a freedom away, and it is what it is. However, if you look at this bill, same thing. It has nothing to do with cryptocurrency at all, the Competes Act. Proponents of the American Competes Act introduced this week in the U.S. House of Representatives said the legislation would make the U.S. supply chain stronger and help the country's technology industry compete with China. The crypto industry is worried the sector will be collateral damage. Again, it's collateral damage because the original goal of writing this act had nothing to do with the cryptocurrency industry at large. Crypto lobbying groups are worried that Representative Jim Himes, remember his name, he's an enemy of crypto, you want to remember who that is, buried around page 1,482 of almost a 3,000-page bill that would allow the Treasury Department to bypass certain checks to take special measures to surveil conditions or prohibit any transaction deemed of concern to U.S. interests, the provision titled. So here's what the title is prohibitions or conditions on certain transmittal funds. Also expands the department's authority to include crypto exchanges and transactions. So here's the part that's interesting. It's this right here, the yellow underline, special measures. It allows to bypass certain checks to take special measures. Now, special measures, I'm familiar with this. This has always concerned me quite a bit. This was introduced from a Republican president, by the way, and I only say Republican president because these issues are not Republican or Democrat. And so I always like to point out that, hey, a Republican president did this, a Democrat president did this, and ultimately they're moving in the same direction. Be aware of that. So a Republican president passed the Patriot Act, and the Patriot Act has this thing called special measures in it. Special measures can only be imposed through regulations and would require public notice and can only be imposed for up to 120 days. So the idea behind the special measures is a way to be able to surveil or put on surveillance. But in order to do it, there's all these conditions in place, kind of a checks and balances. The public notice, it's always going to be put on public notice, meaning it's going to be made public somewhere, typically on a website in this day and age. It can only be imposed for up to 120 days, so it's limited essentially to 4 months at the most. However, now this Competes Act, they're getting rid of the special measures limitation. So now what that means is the Treasury Department can now, without any recourse or without any checks and balances, that's the best way of saying it, without these special measures, they now can survey conditions or prohibit transactions. They can stop transactions that they deem of concern to U.S. interests. The question is, are these U.S. interests going to be aligned with your interests as a citizen, or is this about protecting a banking lobby, the Goldman Sachs of the world? And this is very concerning. Of course, they're going to say this is about, they're worried about national security. They're worried about terrorism. They're going to say something like ransomware and all this nonsense, which is, I just read an article that said ransomware accounted for something like 0.05% of all transactions. And I'm thinking to myself, there's far more than that in drug deals in U.S. dollars, probably. But I digress. The point is, this potentially is a measure that could go after cryptocurrency exchanges. In fact, it sounds down here that's what they're worried about as well. Without due process, many in the crypto industry fear that it could provide a pathway for a misguided crackdown on the use of cryptocurrencies. So there's definitely a strong concern inside the industry. As those of us who believe in this space, those of us who believe in freedom of finance, freedom of transactional finance, then I think this is something that we have to be aware of. If this passes, and if we see, so it's not just the executive order from President Biden. It's not just this bill passing. There is another step that we would need to see, and that is that they actually start cracking down, for example, on cryptocurrency exchanges. And the question is, which exchanges are they going to crack down on? Are they going to crack down on Binance? Are they going to crack down on FTX? Are they going to crack down? Clearly, it's going to be a U.S.-focused exchange. It could be several U.S.-focused exchanges. Here's the thing. A lot of central governments, Russia just talked about banning crypto. They don't like cryptocurrency. One of the reasons the U.S. government doesn't like cryptocurrency is one of the same reasons that the executive order of 16102 supposedly went through. If you read through this executive order 6102, one thing that's interesting, you come down here, the rationale. The stated reason for the order was that hard times had caused hoarding, aka savings, of gold, stalling economic growth and worsening the depression as the U.S. was then using the gold standard for its currency. So people were holding, saving, storing gold because they were worried about worsening economic times. I think it's pretty safe to say that we're in pretty dire economic times right now. The Federal Reserve is trying to raise interest rates, and they're scared to death to do it because they're worried about it causing a crash to the economy. But they're getting into a place where they're going to have to raise interest rates. If that happens and we see an economic collapse, we could see more people start to move towards cryptocurrency as some sort of alternative because they're worried about the government and their monetary decisions. The challenge is they don't want people holding cryptocurrency. They want people spending cryptocurrency. They want people spending into the system. Maybe I'm totally off my rocker here, and I hope that I am. But I fear that this could create a cryptocurrency crash, and I'm concerned about what that could look like. And I'm primarily concerned not about my investments, not about my finances. That'll suck. But I invest expecting the crypto market to pull back. Always. I have been doing this long enough. I have watched bear markets come out of nowhere. So I'm always expecting that we could see a sudden bear market. And I tell my wife all the time, don't worry about our cryptocurrency portfolio. Just assume that it's not there. It could lose 50, 60, 70, 80% of its value very, very quickly. Been there, done that, got the t-shirt. I understand that. I get concerned when I see the government overreach or the potential overreach. I don't think, again, our politicians are working for you and me. And I think the great thing about cryptocurrency is I don't worry about Goldman Sachs currently. I don't worry about what wealthy lobbyists petition our politicians to be able to write laws that favor them and not us. I don't worry about that with cryptocurrency. A lot of people are worried about the scams that exist in cryptocurrency. And guess what? They do. And they're probably going to always exist. You're always going to have someone say, hey, send me a tenth of a Bitcoin, I'll send you a whole Bitcoin. You're always going to see that crazy nonsense happening. It's always going to exist. It's probably never going to go away. And that's up to us as individuals to be responsible with our private keys, to be responsible with our transactions. But it is far better. Let me back up. I just saw on another YouTuber in the comments, they were talking about the need for centralization inside of cryptocurrency. And my argument was, why do you need centralization? And they came back and said, the reason we need centralization is because the citizens want centralization. People want to know if their funds are stolen, that they can call the credit card company and get their funds back. And I think right now, he was exactly right. But the problem is people don't realize why the credit card companies can easily give you your money back. Because they charge you so much interest. They made so much money off of you that it's easy for them to give you your funds back. There's not a law that says if your account gets hacked, the credit card companies have to give you your money back. That's not a law. In fact, it was much more difficult to get a credit card company to reimburse you if funds were missing. I mean, now they don't even think twice. I mean, they'll just reverse the transaction or they'll just give you your funds back. It's kind of crazy how easy it is now. In fact, I had a transaction that I missed in my statement. I couldn't figure out why my statement wasn't, things weren't adding up properly. I finally went back a couple months and restarted looking at all of my debits and credits in my account. And I saw that I had missed a transaction, that it wasn't mine. It was someone had spent $100 somewhere. I reached out to my bank. It was on my bank, by the way. It wasn't even my credit card. All they did was send me a letter in the mail, had me sign it, get it notarized, that basically said I didn't take the money out, someone else did. And a week or so later, they put $100 or whatever it was back into my account. That's only possible because they know how much money they make off of us. Cryptocurrency doesn't have a centralized authority. There's no one milking you for monthly fees. Sure, there's gas fees for transactions, but you can always use a blockchain with cheaper transactions. And again, I'm not saying that cryptocurrency is perfect, but it does allow you and me to be responsible for our own funds. We have freedom to make decisions with our own funds, free from overreaching regulations and financial policies like monetary policies that drastically increase inflation like we see right now. We don't have to worry about someone inflating our cryptocurrency away unless we want to own a cryptocurrency that is an inflationary asset. But again, we get to make that decision based on the blockchain that we use and which currency we use. Cryptocurrency has a long ways to be a perfect solution to finance, but it is improving every single day. And I would much rather have imperfect freedom than to have an overreaching government that can limit our freedom, particularly our financial freedom. Let me know what your thoughts are down in the comments. Thank you so much for watching this video. Do me a favor, smash that like button, share this content. More people need to be aware of what's happening with the regulations in crypto. When it comes to worrying about a market crash, let me leave you with this. Make certain that you're diversified. Make certain that you like all the projects that you have your funds with. Make certain that you understand the risk the best you can of each project. And just know that a bear market can always be around the corner. Thank you for watching. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.